Welcome to B-MoneyTrading. Today we're going to be discussing the overall market and thoughts on the SPY and what direction we're headed, the Federal Reserve, and where do we go from here. So with that said, we'll go ahead and pull up the chart on the SPY. So this is the 1 year, 1 day chart, or the daily. Anyhow, that said, so this is where we're at now. We were at new highs, and then we had this big sell-off, and now we're just now breaking over the 180-day exponential moving average, or EMA. So, was this just a correction, or is this the start of a bear market? Well, if we look back, and this is what a lot of people are saying as far as business news and whatnot, is that it's just basically similar to what happened here, where we were at new highs at 286.63 on the SPY, and had this big sell-off and this big pullback to the 180-day, and it's just a correction. And then we had some volatility, and kind of went sideways for a minute, and then finally, after a few months, started making new highs again. But now we've had another big sell-off, and a lot of people can't explain why it happened. Trump's explanation is that the Fed, is guaranteed 3 interest rate hikes, and it's scaring investors or whatnot. My thoughts aren't so much that it has anything to do with interest rate hikes, so much as it does that the Fed's unloading their balance sheet. Back in the housing market crash, they did quantitative easing to keep it propped up and to keep us from going through a severe depression. And by doing that, they just put more money into the system, which devalued the money that was in our pockets, even though we didn't actually see money come out of our paychecks or whatever taxes. We paid for it by the fact of them printing more money, and the chain of supply and demand. When you got more supply than you have demand, then supply is less valuable. And that's exactly what happened when they bailed them out. They created more money, and so it devalued the money that we had in our accounts at that time, in our pockets and everything else. And so they blamed the poor people for it, the immigrants, school teachers, people that were getting these loans, these bad loans that they were uneducated about, and getting these loans that they knew that they couldn't afford, on their salary, the houses they were getting, $250,000 house, or $500,000 house, or $1 million house on what little money they were making. But they were doing it because there was a boom in the market. And then when the terms on their loan, after so long, it kicked in to where the rates went up, then they weren't able to make the payments, and that's probably a horrible summary of what happened, but that kind of just generalizes it. And so with that said, we never really went through the depression. We had a recession, but we never saw a depression. And so a lot of economists say, well, since that happened, the next one's going to be 10 times, 20 times, whatever, worse, that the Great Depression that happened in the 1920, I think it's 29, somewhere on that air. That was like a cakewalk compared to this next one. that the amount of money they're going to have to pump into the system is going to be astronomical, to where it'll barely, if any, put a dent into this, into what needs to happen. And so so the Fed's in the process of raising interest rates so that they can combat the next blow that comes, because it's not if but when. There's a storm coming, and they say there's always a bubble forming in the market. It's just, where is it at, you know, and when's it gonna hit? And so by the Fed raising interest rates, then when it hits and the market's going down, then they can lower interest rates to stimulate the economy, to get people to start buying and borrowing. And you know, if you're not too familiar with how our capitalist or monetary system works, then I suggest watching a video by Ray Dalio, and basically I think it's like titled the world economy in 31 minutes. And basically he explains within 30 minutes how it all works with credit, cash, jobs, loans, the banks, the government, the Federal Reserve, etc., etc. And so with that said, my thoughts on the market, my thoughts is that after the tech burst and the housing market crash and all that had happened, they finally wised up and put in some measures to prevent a panic. You know, they have the halts now, where if a stock falls so fast within a certain time frame that it's halted to prevent a panic selling. And so that's one of the measures that they took to help excuse me to help prevent such a crisis again. Now with that said, I think what's going to happen is over the next couple of months, years, whatever, you'll see that the market is either going to go sideways, or it's going to gradually come down, you know, hit the 180 day, go up a little bit but not make new highs, and then come down a little bit lower below the 180 day or 200, whatever moving average you're using, come up a little bit and go back down, come up, and so forth, basically to try and cushion the blow. And they'll do things to try and help stimulate, whether it's news or the Federal Reserve's announcing they're going to lower the interest rates back down to whatever percent, to encourage, you know, people to get loans to buy houses or whatnot. And so my thoughts on the overall market is that's what's going to happen. That they've learned from history that you know, it does have to go down, but if we can soften the blow to prevent panic, then that's the best measures we can take. With that said, though, you know, right now the Fed's unloading the balance sheets from the quantitative easing and the treasury bonds, and a lot of people are looking at the 5-year and 10-year yield on bonds, and people are looking for other places to put their money that are a little bit safer and low risk, considering the volatility of the market. I mean, you know, I was talking to a coworker the other day, and he has a little bit of money invested in the Dow, trying to save for his retirement. And he's like, man, I'm a little pissed. I just lost $2,600, you know, last week, which that doesn't seem like a lot, but I don't think he had that much tied into the market. But for him, he's a little bit older and you know, hitting you know, mid 40s, that he's trying to plan for retirement, and which he probably should have done long ago, but better late than never. And so you know, by taking this, this hit, he's lost quite a bit, and this is on the SPY, not even the Dow. The Dow took even a worse hit, fell a lot more than that. So where are we to see coming up? I don't believe it's going to make new highs. I think the new highs are over with. That even with the earnings season and whatnot, people are waking up that the party's over. That it's time to prepare. Look for other securities. You know, they say that some news economists or whatever is saying that this happened because big hedge funds or banks were moving around, you know, their investments in different funds. You know, all these different firms were just realigning their portfolios, and so that's what this creation was. But if you notice, like the tech stocks, Amazon, Facebook, Twitter. Let's see what Twitter's doing. I haven't looked at Twitter in a while. I forgot. How did I forget the signal for the symbol for Twitter? Yeah, I mean, you see Twitter right here. It's taking a fall. Facebook, that a lot of that had to do with the security breach and why it went down, but still it's down. Trying to see if I don't think I'm getting an echo. Anyhow, with that said, where are we at with Facebook? Facebook, I mean, can you imagine if you were in on this and you had X amount of shares, even if you had bought in at an average price, you know, of 185 to see this kind of hit, and would you have stayed in? And if so, would you have gotten out when it came back up or stayed in? You know, and now we're down here, and you know, people are waiting for a reversal for it to start uptrending. No, yeah, maybe over the course of time, over years, it's going to go back up. But I think, you know, after everything that's happened with these security breaches and everything, with these tech stocks, that people are starting to wake up and say, hey, man, this is not what we thought it was. You know, we thought this was guaranteed money, you know, and not looking so hot anymore. You know, what's another big one? Amazon. I mean, even Amazon's taking a hit. And you know, I was listening to Mark Levin, and he had this. I'm not even sure who the guy was, but he wrote a book about life after Amazon or Google. Sorry, life after Google. And basically, what he was talking about was that, you know, capitalism and socialism and the difference and all that. And I'm not getting so far into that as I am the thinking behind it all. And he talked about that, like during the industrial complex, when whoever, you know, they invented the railroad and they had all this, and they thought like, this is it. You know, it doesn't get any bigger and better than this. And then here comes along the internet, and they think, okay, well, this is it. And then here comes along Google, this is it. Here comes along, you know, retail on the internet, and so this is it. And that's what you see with this Amazon, is this is it. And it's just a matter of time before something else bigger and better comes out. We're always progressing in technology, you know, pushing forward. You know, Amazon's down, and it'll probably make a comeback. I'd say, yeah, it will. Anyhow, so getting back to the original thoughts on the market. So we see this, the big sell-off. And now I would put my money on, a lot of people are buying options for the 280 for the 19th, this Friday. Um, and keeping in mind, this is all in my opinion. Now, yeah, I think it'll get up there to 280. How much further will go after that? I don't know. They say, you know, the market's real volatile around election time, and there's always a sell-off in October, and I think that was a self-fulfilling prophecy as far as a sell-off in October, because everybody says that, so everybody was waiting for it, and when they started to see the slightest sell-off, then everybody jumped on board and got off. Um, and so, you know, you'll even hear Jim Cramer talk about, you know, now is not the time to be a hero. Um, buy a little here and there, but it's not time to go all out and be a hero and try and push the market back up. And I think that's just in general, not just for like the big hedge funds and firms and banks and all that, but you know, the individuals as well. Is now's not the time to be buying, because we're at a point in history where we've never been, as far as with the quantitative easing, interest rates being at zero and now they're coming back up. Um, you know, unemployment being at all-time low. You know, how is this all going to affect the economy? Um, so everyone's working now. Does that mean people are going to continue to get loans because everyone's working, or are they working at minimum to low pay wages, to where they won't even qualify for loans? You know, one of my big fears is the auto industry. We've seen a big boom in the auto industry, and how long can this go for? You know, how many people can they find to buy these $80,000, $100,000, $150,000 cars? Um, you know, only so many people make enough money that can afford that. You know, I work for one of the big automakers, and you know, even being an employee there, I could afford one, but I wouldn't be looking at buying a house anytime soon. You know, we're talking paying over $100-something thousand for a car. You know, nowadays that can buy a decent house depending on what state you live in. Um, so with that said, I think we're gonna make a little bounce back up, but ultimately we're gonna go back down. We're not done yet. You know, um, it's search for a bottom, and everyone thinks this is the bottom, but I don't think it's the bottom. Um, I think the bottom is going to be a lot closer to down here, at the 250 area. And even then, I don't know if by that point the hemorrhaging is going to stop, because people are going to be so reluctant once it does hit that new bottom to buy back in. You know, this is, you know, a lot of the market is based on technical analysis, but as well, human psychology, the way people think. The market's always trying to trick you. You know, one of the famous words of Jesse Livermore is that the market is going to trick you more often than not. You know, timing the market is extremely difficult. That the average investor stays in at least 5 years to make a profit, because if they try to time it, more often than not, they'll lose money. You know, I trade options, and I've learned how difficult it is to time the market. That even the best of the best um, lose money, and depending on market sentiment, sometimes the best thing you can do, and I'll quote Jesse Livermore quite a bit, is sometimes there's a time to trade, and sometimes there's a time to go fishing. You know, this might be one of those times that it's time to go fishing until we can kind of see a little bit more stability in the market and less volatility. Now, volatility brings opportunity, but it also brings big opportunity to lose a lot of money as well. And so, depending on how confident you are in your trading and your strategy, is really going to determine how many people are going to participate. And right now, with it doing this, A lot of people are gonna be buying in, but when it has its next sell-off, a lot more people are gonna be more reluctant, and that's why you see it's not making a bounce back up so quick like it did back here, because we've seen this previously, and so now people are becoming more reluctant. These are my thoughts now. Keep that in mind. I'm in no means a financial advisor, but I've been trading for a few years now, and have learned some along the way as well, you know, through studying, learn about the economy, previous historical market data, and the way that people tend to lose rational thinking when money's at play. So with that said, where are we gonna go from here? You know, break it down on a smaller time frame. This is where we're at today. And we're seeing it gradually go up. But even at this point on the RSI, it's close to oversold. And so it's got a ways of ground to make back, and I just don't see us, even after the elections, I don't see it making back as strong a comeback as it did previously. You know, it's good that we're over the 20, but we're still so far away from the 180, and I don't see us getting above it anytime soon. Maybe when it gets closer into December. But with that said, you know, is this a bear trap, or is this a bull trap? Is this time to get in or stay out? And a lot of it depends on your strategy, whether you're a trader, investor, and whatnot. You know, I continue to learn and study the markets. I recently started this small trading account challenge, and you know, if you want more information on that, then you can go back to previous videos. And with that said, you know, stay tuned. I continue to update my thoughts on the overall market, where we're headed. I think though overall, as the Fed continues to unload their balance sheets, as well as interest rates rise, people are gonna be more reluctant to borrow money, and you know, it's gonna unbalance the system. And so you know, partly that's basically what a correction is that the system's out of balance. And you know, is it still out of balance? I think it is. I think it's really out of balance. And you know, it's still got some downside to it before it kind of gets back a handle on things. With that said, I'm gonna go ahead and wrap this up. Thanks for tuning in. Please hit the like, subscribe button. Here in the next week or two, I'll start putting a little bit more time into the visual part of my uploads, as well as live streams. Try to make them look a little bit more professional. It's just right now, you know, I'm working 6 to 7 days a week and putting in a lot of hours, and then trying to find the time to do this and still do trades in the market and research and study. So, you know, just like most people are running into, there's just not enough hours in the day. But with that said, thank you for your support, and look forward to putting out some more material. And until then, stay tuned and have a great day. Happy trading.